welcome back. Today's topic is the importance of two parts to every trade, right? So every trade, there's two parts. It's when to enter and it's also when to exit, and both have to be correct in order for you to make good money. If one's good and the other one's only okay, you're gonna leave a lot of money sitting on the table, and that's exactly what happened this past week for us. We did a really good job entering the S&P 500 SPY puts at pretty much the top, 2470, and actually I sent the alert just just maybe 2 or 3 hours before the Wednesday Fed meeting when the S&P futures were at 2470, and the next morning it opened around 2463, so it was down like 7 points, and when it went down to 2457 ish, so basically a 13-point gain, we exited our puts, and that was definitely way too early because what ended up happening was, yeah, sure, the SPY puts went up something like 50%, so that $1,000 became 1,500 or so, but the market proceeded to actually go towards our target, which was retest of 2430, and had we held on, that 1,000 would have become like 3 or 4,000, and that would have been like several 100% return instead, and so we totally missed out on that, and the reason is because we exited too early. There's two parts to every trade. The entrance was correct, but the exit wasn't. So I think a lot of this has to do with patience and just conviction that your target will actually be achieved. I had some hesitations about whether the target I was aiming for would actually be achieved. Basically, overnight, it didn't move down as much as I expected, and so it didn't seem like it would actually happen. But hey, once the market opened, uh, give it a couple hours, it actually did follow through and drop all the way as I expected. And so that's really a big lesson for me, that just to be more aware of the importance of not exiting 100%. What I should have done was exit 50%, and instead I exited 100%. Still, it was a $500 profit or so, but it wasn't what I was aiming for, especially given that the previous time this happened, this same thing happened last week on Thursday. And it happened on Thursday this week as well. Last Thursday we got a huge gain. We got well over $1,000. We made money on the VXX. We made money on SPY puts, and that one we sold half, and it bounced back up, and so we sold the other half. But in this case, I should have done the same strategy, which is I entered perfectly. I should have sold half and let the other half ride out. Had I done that, the $500 profit would have been well over 1,000, closer to 1,500 or 2,000 in profits. Now, with that, let's take a look at the actual markets. The markets we have up here. If you're watching on YouTube, we have we're showing the video, a screen of the S&P 500 daily chart. And if you're listening on a podcast, I'll try to read out some of the levels so you can understand. Basically, on a daily basis, we're currently at 24.25 in this August 20th weekend, and we hit a high of around 24.87, dropped down in an A wave towards 24.30, bounced all the way back up to 24.73 in a B wave, and that B wave can actually be seen as a subdivided 5 wave, where the 3 and the 5 both went over 2470, and where we just completed, it looks like the C wave. Now it could be a wave 1 of the C, or it could be all of C, and this would be an ABC completing within a larger degree wave A, and then what would happen next is next week we could get a B wave bounce, or if the markets just completely fall apart overnight, it could form, it could get our targets of lower than 2420, and that's possible. But based on the bounce on Friday, it looks like we could retest 2420, and then from there bounce up. And ideally, I would like to see sometime early next week, Monday or Tuesday, or hit the 2445 region, and maybe even the 2452 regions. And if it hits that, that could be a potential resistance zone. Unless that turns out to be a larger degree B wave and we could visit close to the new highs once again. But I believe the downside should be limited, and it really depends on if the momentum carries through Sunday into Monday. There was a setup for that, but I think given how crunched up the candles are, it doesn't look like that's going to happen. So I just wanted to quickly review the week. We bought August 10th puts. No, we bought August 25th puts. We bought 10 of them for two at the 247 strike. Yeah, we did that on Wednesday, and on Thursday we exited, and that was the exit that was too early. And so that's what this 100%. It should have been 50%. We should have sold half and let the other half ride. But earlier in the week, we actually did a pretty good job predicting uh, in our charts that if the 2460 level were to break, we have a blue arrow below this blue line at 2460. If that were to break, then it would that blue arrow is pointing down, and that's actually what happened. If you compare that prediction to what happened, uh, we basically we basically broke that 2460 level on Thursday. The thing is, when it breaks 2460, it goes all the way down to 2450, and then it bounces all the way back up to like 2459. And so it's kind of like this. That level is a resistance zone. So when you break it, yeah, it'll break quickly, but that you also have to watch out for a quick move back up, and know that that former support is now resistance. And so that just because it moves up, that's not a sign that it's going to move. The market's going to move higher. Instead, that's a sign that it's retesting that zone, and that zone area should be a sell. So that's the insight for today's lesson. Basically, getting one half of the trade is not good enough. You got to get both correct. In this case, it was still a profit, but I mean, the whole point of doing this, spotting this setup, is to actually get, you want to maximize your gains, not just take profits at the slightest chance. And so, both parts of every trade have to be good. Doesn't have to be great, but it's got to be at least good. And also uploaded a copy of our. We have a model portfolio we started beginning of the year, tracking our trade alerts, and so we put up a brokerage statement, and it's available on our website. You can check it out, and the PDF file has it here. I'm loading it up here on the screen if you're watching on YouTube, and this is probably from a few weeks ago. The account balance is at 25,000. The starting balance was 20,000. On this screen, it's showing 19,000. That's because I technically started this, I think, the early December, and at the new year it closed down to 19,000. And since then, it's gone up to 25, and actually now it's at 27,000. This statement is just a few weeks old. Sometime later, I'll upload another copy, but that's wanted to provide that on the screen if you want to take a look. And that's available on our website at lifestyletraining101.com. So best of luck with the market waves, and I'll see you guys next time.